Hello, everyone. Welcome to another edition with yours truly, your favorite college for free coach, the college prep boss herself, Tameka Williamson. And I am excited to come before you to share more life changing information. So, we're talking about one of the hottest topics out there, uh, President Biden's student loan debt cancellation program. Well, I don't know if I want to call it a program, but student loan debt cancellation announcement that came out last week. And as a result of that, many people have expressed their views, their opinions, their thoughts. So, again, let me remind you that this is not to debate the legitimacy of it, the fairness of it, or any of those things. What we're talking about is we're sharing information to help those determine one, determine and understand whether or not they qualify, how to determine if they qualify, the steps they should be taking, and all the other ins and outs that's layered into the announcement because there are many factors and a variety of groups that's impacted. So our first session or the first series, we discuss, the qualifications, who qualified, who didn't, what were the actions everyone should be taking right now to determine if they qualify, to be able to see what the history of their loans as well as all financial aid they received. So we talked about that in part one. Today we're talking about private loans versus federal loans. There's been many questions around whether or not my loan qualify. What about private loans and all those different pieces? So what I'm going to do is first just cover just some fundamental definitions so that you understand one, the difference between the two, and then I'll go into what qualifies and what's not going to qualify for student loan debt cancellation and why. So if you know someone who needs to hear this message, who could benefit from this message, go ahead, share the information now, invite them to join, and let's go ahead and let's get started. Again, I'm not going to be before you long. I want to just get to the point. Uh, let's talk about it and then let's keep it moving. All right. So, um, when we talk about what loans qualify, the overarching fundamental answer is this: all loans backed by the federal government. Well, what I'm learning and I'm understanding too is there are people out there who's totally unaware that there are different types of loans that exist. People just think student loans, they all the same. We can lump them all into the same category. Well, that's just not the case. All loans are not the same. All student loans are not the same. Everything is not equitable. Shoot, let's talk about the whole process that's not equitable. But we're not gonna go there. But all loans are not the same. So when you look at the surface level, you have federal loans and then you have non-federal loans. And those non-federal loans are typically just classified in standard language as private loans. So basic differentiator is this: federal student loans, which also includes federal parent loans. So that's the parent plus loans. These are federal loans, or these are loans that are funded by the federal government. That's why they are called federal student loans. When you start talking about private student loans, these are loans that are non federal loans, meaning they are funded by private entities, which could be a bank, it could be a credit union, a state agency, as well as it can be a school or an organization. But those are considered private student loans. So you may be wondering or thinking, hey, I've been out of school for a long time. I don't remember what process I went through, who I got a loan from, and all those things. That's why you need to go back to video number 1 so that you can do some preliminary steps and gather that information for yourself. So to take it a step further, now we understand just the basic definition. Let's just understand it a little bit more how they differ from one another. So again, I'm just about to give you some basic information, and this part is going to be helpful for especially for parents of college-bound students who are entertaining loans. You know, if you follow our platform, the College for Free platform, and our model, we educate parents on how to navigate the college admissions process and avoid or minimize the amount of loans they need. We believe in avoiding Parent Plus loans at all costs. We definitely do not advocate for private loans, but people are going to do what they want to do or what they feel is necessary to accomplish their end result. But let me at least equip you with the knowledge so that you'll know and understand the difference. And then, based on the differences, you'll be able to assess and compare the implication. What type of risk will you be taking on depending on the loans? So, again, federal loans are backed by the federal government, non federal loans are not. When you start looking at federal loans, what differentiates the loan from one another? And if you don't know what type of loan you have, hopefully these key characteristics that separates one loan from the other will be an indicator for you as well. So first, when you think about when payments are due, so typically when you're talking about federal student loans, those payments they aren't due until after you graduate, leave school, or change your enrollment status from full-time to half-time, yeah, to a part-time student. So that's usually when you have to start paying it back. So typically after graduation is about 6 months. Um, if you leave school, it depends on when you leave and how you leave. That can vary, but any change, that's when that payment has to kick in. Now, when you start talking about private loans, they set their own rules. They do not have to follow the government standards, which is why some of you probably did not get to take advantage of the forbearance period that the government enacted during the pandemic. So basically, that was a period where they put payments on pause. If you have a private loan, they don't have to follow or adhere to that. So some of you with private loans, your lender probably told you you still need to make payments. That is an indicator that you have a private loan and not a federal loan, federally backed loan. So when you start talking about private loans, many private loan payments require payments while you're in school. Some do allow you to defer it, but it's usually not as long as the federal loans. So that's one difference. Another key differentiator between the two is going to be in interest rates. Your federal loans are typically at a much lower interest rate, whereas your private student loans are much higher. And so, of course, with that, you have under the federal student loan umbrella, you have what's called unsubsidized and subsidized loans. So unsubsidized means you're going to whatever interest is accruing on the loan, even while you're not paying it back, that interest is accruing and you are responsible for paying it. Subsidized loans is where there are subsidies in place, and that is where the government is going to pay the interest for you while you're in school. Now, when you start talking about private loans, we're talking about private loans. They're not giving you anything. So those loans are likely not subsidized. They're not paying the interest for you. They want all their coins. So that's another key differentiator. When you start talking about the requirements for federal loan versus private loans, federal loans, the requirement is that you're in school, and of course you complete the FAFSA, and that dictates your qualifications for a federal loan. Now, for undergraduate students, it's a fixed amount that you can get, and there is a maximum ceiling around how much money you can receive for federal loans. Because of that maximum ceiling, that's where that's where families get into those parent plus loans and the private loans to fill the gap, to bridge the gap. So when you're trying to qualify for a federal student loan, no credit check is required. But if you're a parent and you're going after a parent plus loan, credit checks are used to determine your eligibility for a parent plus loan. And then, of course, a private loan is treated like any other loan, from a personal loan to a car loan to a home loan. They are going to require your to run. They're going to require a credit check. So that's another difference, another differentiating factor between those type of loans. Now, because they're loans and they're for education, even with the private loan, it has to, if it's an educational private loan, it only can be used for education. But you can write the interest rate, the tax. You may be eligible to write the tax. Uh, I'm just all over the place. You may be eligible to write the interest off on your taxes, and I say may because there are certain income thresholds. That it depends on what the tax laws are at that time. But right now, there are certain income thresholds where if you make over a certain amount, you can no longer write off the interest from your from your student loans. Okay. Now here's another key differentiator that is definitely coming into play with with the debt cancellation and just with student loans period as well. So consolidation, the ability to consolidate and refinance your loan. We know we were told the bill of goods, we were told the story. Student loans are good debt. They have low interest rates, so you want to get that. Well, things have changed. The interest rates are still lower, but the dynamics in which you're taking on that student loan have definitely changed. But again, we're not going down that lane. But at the end of the day, your federal student loans can be consolidated by going through the direct consolidation process on the Department of Ed website and your federal student loan website as well. Same thing with the Parent Plus loan. Now, with private loans, when you start talking about private student loans, they cannot be consolidated into a direct consolidation loan, but they may be refinanced. So what you're seeing, or what if you've been listening to all the differentiators, what you're seeing is you have less flexibility when it comes to private loans compared to federal loans. Federal loans have more flexibility. They are also a lot more lenient. So if you have to get a loan, you want to avoid private loans at all costs if possible. But here's another key differentiator. Well, several of them, when you start looking at the difference between federal loans and private loans. Excuse me. Postponement or deferment options. If you're having trouble repaying it back, this pandemic is probably a good indicator of the type of loan you have, because it's based on the willingness of your loan servicer to work with you. So with the federal student loan, you have a lot more options versus a private loan servicer. They don't have to work with you. It is at their discretion. Yes, right, wrong, indifferent. It is what it is. It's their money they loaned you. They make the rules. So they may allow you to postpone it. They may not. And if they do, there just may be stricter requirements as well as stipulations compared to what you get um, with federally backed loans. Same thing with repayment plans. The repayment plans, the repayment options, the aggregation of the interest, all those things is going to vary between the two. Although you look at the studies around federal student loans, how somebody could start out with $43,000 and then shoot 20 years later that loan is now $100,000+. The federal loan, that the way their interest accumulates is is not good neither, but compared to a private loan, you know, they pale in comparison. So those are some of the key differences between those two different loans. And so we're talking about loan forgiveness. So from a loan forgiveness standpoint, from a federal student loan standpoint, you very much you may be eligible. You have a greater chance of being eligible for loan forgiveness. Whereas private student loans, many of your private lenders do not offer loan forgiveness because, again, they want their money. They don't offer loan forgiveness programs. Some of their loans, depending on who the servicer is, you know, if it was a state agency, then there may be some programs in place and based on certain circumstances. So you really have to go back to the person who owns your loan to explore what those options are. All right. Now, now that we've covered the fundamental pieces, giving you some definition and some background, you know, let's take it to the next level. So let's see. I also see some comments, so I want to make sure. So hey, let's say shout out to Keita. It's her first time here. Thank you for checking in and sharing in the comment. Welcome to the College for Free community. Let's see. So basically, private student loans are not eligible for debt relief plan. Got it. Well, technically not, but let's just talk about this. I just want to make sure, because, like, again, remember, I talked about this before. Everything is not a straight shot from A to B when you're talking about anything dealing with the Department of Education and college. So from college admissions to financial aid to student loan, all those different pieces. It's just not a straight shot, unfortunately. That's why we need major reform, because our whole system is just too convoluted and it is confusing. Okay, it is confusing. So um there are some loans, there are some loans that's excluded, and there are some loans that you could potentially, I don't want to say use the word convert, but in essence that's kind of what you're doing, so that it could qualify for debt forgiveness. So again, you have to go back to your servicer, because there are some instances where some loans could be consolidated into a qualifiable category. And so that's why that preliminary work is essential, so that you can find out the source of how your loan was acquired. I mean, basically, when you first got it, who was what were the terms and all those different pieces, can it be converted, and all those things, because there are some loans that could potentially work. It just depends. So let's talk about like the FFEL loans. So the FFEL loans and the Perkin loans, those particular loans are excluded from the student loan debt forgiveness program. So you're probably like, what in the heck is FFELP? Well, they're no longer an option, but there are people who have these, and so they was probably hoping and looking for relief, but this does not fit the bill for them. So when you talk about the FFEL loans, these are loans that were federally guaranteed by the government. They were originally funded by private companies. So that is why they don't qualify for the forgiveness right now. So they're federally backed, but they were originally funded by private companies. So the FFEL program actually ended in 2009-2010 academic school year. So they didn't issue any loans after that particular time period. So like I said, there are people who still have those loans, who were probably hoping for relief, but unfortunately, um, this loan does not qualify for debt forgiveness. So that's the FFEL loan. So if that's one of your loans, then if your loan falls under that, then you'll have to explore and see what other options exist out there. So they did put some things in place to help with those loans, but nothing really is being said in terms of the forgiveness piece, because they've even implemented like a 0% interest. But I know that's not the same as forgiveness. And then when you talk about the federal Perkins loan program, that program also ended. That program ended back in 2017. And so that was a program where they awarded low interest federal student loans for undergraduate and graduate students who had exceptional financial need. So it allowed them to borrow more than what the standard federal cap is that's in place when you're doing your basic federal student loans. Because remember I said it's a maximum amount of money you can borrow, and you only get a set amount based on what your classification level is at the university. So those were the alternatives and the other options families were able to take advantage of to help bridge the gap when paying for the total cost of attendance for their child's education. So I'm sorry, if you have the FFELP or Perkins loan, those loans are not going to be eligible. Okay. So I'm just the messenger. All right. So again, you need to go back to the source, dig deep, dig into what type of loan you have, and go from there. Now, there was an announcement, I forget how long ago it was, where they have the Navient settlement. So many of us for a while had paid our student loans through Navient. Now, that settlement does not cancel your student loans, all right? So you don't want to confuse the two, but it could also provide some benefits to you if your balance exceeds what the 10 or the $20,000 threshold that's covered under the debt cancellation as well. All right, so make sure you work every avenue you have to try to wipe out as much as you can. Lessen the debt, the impact as much as you can. So let's see. Do we have any other questions? I'm curious. What's the average interest rate for student loans? So okay. So from a federal standpoint, interest rates have always hovered somewhere between a 3 to 4%. That's typically where they've been. So I think I had, when I went and logged in and looked at my account, I think mine is somewhere like I think maybe 3.125 or something like that. But that's typically where your student loans have been from a federal standpoint. They usually have not gone over 4%. Now, that is not applicable to the Parent Plus loans, because Parent Plus loans are at a higher interest rate. So they're usually around 6%. So it depends on which loan you're talking about. Okay. But great question. But even at that 3%, the way man, the way that interest accumulates over time, man, it's just unbelievable. It is unbelievable how they come up with how those loan balances were increasing faster than they were decreasing, which is part of why we have the problem we have today. Okay. So that is pretty much it. I know it's probably not what many of you wanted to hear, but hopefully you at least got some insight, and hopefully you'll be surprised and you'll discover that, hey, you actually do have options. So again, that's why I was saying, don't throw the baby out with the bathwater. Find out what your loan entails and go from there. Keep your ears to the ground, because it may not be total debt cancellation, but you may be able to take advantage of. So I know, like, some of them, they're putting in place, like with the Navient settlement, loan balances are going to be forgiven after 10 years of payment rather than the existing 20 years um, for borrowers with, I think, $12,000 or less. And so there are different stipulations and different initiatives out there. It may not be as good, but if it at least offers you some type of solution, at least you have an option versus nothing at all. And then, of course, don't forget when I talked about the public service, the PSFL, I always mess it up. Public service PSLF, public service loan forgiving. I always have to say it out loud. Check that out to see if you qualify. So explore all avenues, explore all options, and hopefully something will work out for you. Well, thank you for tuning in. Again, today was just supposed to be focused on helping you understand the difference between private loans and federally funded loans, what qualifies for the debt cancellation and what does not, and why. So tune in tomorrow. We're going to go a little deeper and look at current college students and future college students. So that's where we're going to spend the rest of our time looking from that lens as it relates to student loans going forward. So thanks again for joining. As always, it's an honor to share knowledge with you, to help educate you, to help empower you, and help enrich your lives so that you understand how to play the game of college admissions and hopefully can avoid student loan debt, because that's what we want to do, is avoid it. So share this with someone you think can benefit from it. And I'll see you in tomorrow's edition. Remember, the time to be ready is not the time to get ready. Let's always look at how to position ourselves to be in a place of readiness. This is your favorite College for Free coach signing out until our next edition.